Good day, Vincent and Chloe. I'm Shemaine and have been watching your video for a while now and learned a lot from you both. And thank you for your effort. I've been wondering if the flipping property market is still viable. My family members are always talking about how they used to buy an under construction property at a very low price. Then when it's done, they just sell it off and the price doubles up. And some are talking about they renovate the house to sell it off at a higher price. But then I found out that during this process, sometimes there is a difference between the bank valuation and also the market value of the property. What is the difference between bank valuation and market valuation? Hope you can get back to me on this and wish you have a good year ahead. Cheers!
Well, thank you, Charmaine, for reaching out to us with this message. Honestly, bank value and market value is very, very confusing, especially for property buyers.
Yep. So when it comes to determining the value of the property, right, it's very important to understand the difference between the bank valuation and also the market valuation. These two methods are probably similar in some ways, but produces different results due to the different approaches and also consideration involved.
Yep. So in today's video, we are going to dive deeper on the differences between bank valuation and also market valuation.
What's up, everybody? Welcome to VC. My name is Vincent.
And I'm Chloe.
Just a summary of what our friend Shemaine just said, that she's wondering how is the flipping property market working. So since it's always like a table talk within the family members regarding on how back in the days you could just purchase a very low price, then sell it off when it's done, right? And she's also asked about the difference between the bank valuation and also the market valuation for the property.
Yep, so to answer her first question, whether the flipping property market is still viable, well, there are a lot of factors to consider if you're looking into flipping property. The first thing that we would suggest to look out for when you're looking into flipping properties is about the valuation report, which we will dive in that later.
Let's say the scenario was you bought this property for 400,000, so your renovation cost around 300,000 for the whole thing, and you want to sell it off for the property for around 900,000 to 1 million. So which your buyer thinks that is reasonable because you did a kitchen extension, new roof, and also new tiling.
So when your buyer wants to borrow the money from the bank will appoint a professional valuer to value the property. Yet they think that the property only worth 800,000.
So your property is still selling for 1 million, right? Yeah, the bank valuation is only like 800,000, which means the bank only lend your buyer for 900,000, which 800,000 is 90%, which around like 720,000.
Yep, this also means that not only your buyer needs to pay the 10% down payment, balance of 80,000, but they will also have to pay the balance of 200,000 in cash. In this case, they would need to pay the balance total of 280,000. In our experience, not many people would be carrying so much cash to purchase a property lah.
Yeah, the second thing to consider is if you are flipping property is regarding on the property gain tax, which is RPGT. So the RPGT is real property gain tax in Malaysia, where the profit of selling a property is being taxed. So like Shemaine mentioned that her family members talk about back in the days you can buy a property with a very cheap price when it's still under construction, but when it's done already, then they sell it off.
Yep, back in the days when there's not so much properties being built, especially for landed house, you can still find the properties at the starting of the construction being sold at 300,000. Then when it's done, the value already like double up to 600,000.
Yep, yeah, but nowadays you hardly can see property like those. Plus there's like RPGT, which technically imposed to prevent many people from flipping the properties. So imagine now you purchase a property for 500,000, then the property done is gonna raise for its capital up to like 600,000, let's say. Yet it still kind of depends on the location too.
Yeah, so which means your profit is 100,000, and for example, the tax rate is 30%, which means 30% of your profit will be going to tax. So is it still worth it to do the property flipping when initially you had to pay for all of the miscellaneous fees, etc.? So it kind of depends on you.
Yeah, the third thing to consider when it comes to flipping the property by purchasing a property, then renovate it, again, is the renovation fee lah. Many people purchase this property, then renovate it are usually contractors lah. So imagine if you're going to renovate it and having to call the aircon guy, the tiling guy, the wiring guy, and so on and so forth to connect with all of these people, right? So in our experience, if you are dealing with them one by one, especially when you're not familiar with all of these things, right, you are most likely paying extra.
Yep, exactly. So is it still worth it to do all the renovations then selling it off, especially when the materials are getting more expensive and also workmanship too?
And I think that's the main thing to consider when flipping a property. So back to our topic today, what is the difference between bank valuation and also the market valuation?
So a bank valuation is the amount of price that the bank is willing to lend you against the particular property upon consultation with a licensed valuer. Generally, the valuation from a bank will be lower than the market value, as banks will want to protect their investment risk. So generally, because of its objective, lack of emotions, tendency to be conservative, and an as of the moment and condition approach.
Yeah, this value will be the amount bank thinks that they can get for the property in the event of the buyer default on the loan, and the bank will have to sell the property to recover its loss. This type of valuation is typically performed by a professional appraiser or a lender's in-house valuation team, and is based on a variety of factors such as the asset's condition, location, and also the market trends.
On the other hand, market valuation is essentially the price that the property will trade on the current market. Basically, the estimated amount for which a property should exchange on the date of valuation between a willing buyer and also a willing seller. We can also treat recent past transactions of such properties as the market value too.
Yeah, some people may also call it the market asking price. The main thing to understand about the market valuation is there's an element of emotion and sometimes ego that can drive up the price.
Yeah, the way to understand this point is when, for example, at auctions, buyers can get away with the competitive environment and end up paying way much more than their budget just to win for that property itself.
Yeah, it's the same thing when there are 4 keen buyers looking at the same property at the same time. One of them offer pay more for the property, which make them pay too much just because they are fear of missing out.
Yep, you can also agree that market valuation is also based on its current market price, which is then determined by the supply and also demand. You can also see that market value can be affected by economic climate and any external factors that may impact the asset's value.
Yeah, while both bank valuation and market valuation can be useful in determining the value of an asset, it is important to keep in mind that they might produce different results. In any case, it's always a good idea to consider multiple valuation methods and also to seek the advice from professionals when making important financial decisions involving these kind of assets.
Yep, and I guess that's all from us today. Once again, thank you, Charmaine, for contacting us. Hope this video actually helped you to understand more about the flipping market and how is it done back in the days compared to right now, and also understanding bank valuation and also market valuation.
That's it from us today. Thank you for watching. If you have any more inquiries or questions about real estate, don't contact us at VCestate.co/contact or DM us on IG, Instagram, VCestate.
If you want to know more about capital appreciation versus rental income, on which is better, you can check out this video right here.
And if you're still new in the property market and not sure how to choose and purchase your first investment property, you can check out this video right there, and we'll see you in the next video.
Ciao!